We're at the time of the year when a lot of you think of, and I must say this, myself included, I think of how to reduce my tax bill because all good intentions aside, you tend to procrastinate. At least I tend to do that. And as a lot of you will have experienced, the year goes by and you've still not made those tax saving investments. It's not too late, I must tell you that. There's still about 20 days to go for the end of the year, and we're here to give you all the tips and tricks that you will need to cut down on your tax bill. Arvind Rao, chartered accountant, certified financial planner, and founder of Arvind Rao Associates, is joining me now to tell you exactly how to do that. Arvind, thanks so much for joining in. And I think the first thing that we need to specify is that you need to have, if you are a salaried employee, you need to have told your payroll department that you are making certain investments, otherwise they would have cut the tax, right?
That's right, Alex. In fact, at this time of the year, I think most of the people would have already been past the declaration part of it. By now, they are supposed to furnish proofs of whatever they had declared earlier, and basis which the companies would be re-looking at the deductions that they've already made and making adjustments to the tax that is payable on these salaries.
Okay, so let's talk about one more thing, which is if you opted for one or the other. I know that we've had this conversation in the past, Arvind, but just for the benefit of those who are still confused about old regime versus new regime, how does that pan out? If you selected new regime, none of the deductions come into play right now, but they can come into play at the tax return filing stage, right?
Well, it's not that way. So salaried people have a choice. I mean, even if at the beginning of the year their employer would have made them choose one of the two regimes, and independent of what they chose at that point in time, and the subsequent TDS deductions that might have happened at the employer end, while they file their return, they have to make the final choice between them. So, for example, if they would have already chosen new regime in their at the employer level, but at the point of filing, if they want to go back to the old regime, they are it's very much possible to do that, and they can file their returns based on the old regime then.
Yeah, that's exactly what I meant. Okay, so let's assume that the option is still available to make tax saving investments. If you are salaried, Arvind, the automatic saving that takes place is through the through the EPF, right? The Employee Provident Fund. And if you're opting for the VPF, what else can you do under ATC?
Alex, let me, I think, take this opportunity here to tweak your question a bit. Because, yes, ATC, there are like a wholesome lot of options that are available from an investment perspective. But what I generally talk to people and I advise them is that before you move to investments, let's look at some deductions that are available under ATC and certain other sections of the Act, which gives you a deduction or a benefit for certain kinds of expenditure that you are already incurring. And since you mentioned about ATC, I will take up that section first. So, for example, all the tuition fees that people pay for the kids, for their kids, is allowed as a deduction under ATC, subject to the limit of 1.5 lakh. Some peculiar things that I'd like to highlight here. One is generally when you hear the word tuition fees, I have come across a lot of people who tend to believe that only the tuition fees paid in the school is allowed. But let me make it clear here that even the tuition fees paid in the college for your kids is permissible as a deduction under ATC. But it is subject to a maximum of 2 kids. That is, the fees payable for 2 kids is covered here. The other major expenditure that you may be incurring is, let's say you have been a home buyer in the current year. So generally when you buy a home, you end up spending a decent sum of money on the stamp duty and registration fees that is payable at the time of registering your agreement. And ATC gives you a deduction for the stamp duty and registration fees that you might have paid. Um, in of course in the year in which you have registered the property. So in the subsequent years, obviously no payment, hence no deduction. In case you have not bought a home this year, but you had bought it in the previous years and you are servicing a home loan, then in that case, your EMI that you have been paying breaks up into two parts. I think most of our viewers here would be aware of that, which is the principal and the interest. So I'm just repeating it that whatever principal you might be paying as a part of your EMI gets eligible as a deduction under 80C. And again, a most commonly used deduction is the interest that is paid on the home loan is available under a different section, which is 24. And but I think most of us are aware that up to 2 lakhs you can claim the deduction. One final expenditure, which a lot, I mean, there is a lot of awareness around it, and I see a lot of people taking up term insurance as a protection measure. Now, generally, a term plan premium that you pay is considered as an expenditure because you don't get anything on the maturity of the term plan. So this expenditure, which is the term plan premium, is also available as a deduction under 80C for taxpayers.
Okay, so you've spelled out all the expenses. Let's also talk about the other sections. I think you mentioned section 24, but there are a few other expenses that you can make that you can claim deductions on, right?
Absolutely, Alex. In fact, let me extend the same expenditure argument that I've been making. So, for example, if you have been incurring certain expenditure on getting a Mediclaim cover for yourself, your family, or even for that matter, your parents, then that you are eligible to claim a deduction for the medical premiums that you pay. And there are limits. I mean, this could be as high as 50,000 or even 75,000, which includes premiums paid for parents. This is available under 80D. Likewise, if you are servicing any education loans, whether it is for your own higher education or even if it is for the higher education of your kids, then the interest that is paid on these loans is also available as a deduction under section 80E. And while most deductions or exemptions under the income tax come with a limit, I'm very happy to repeat this fact here that any interest that is paid on an education loan is available as a deduction without any limits. Of course, there is a limit on the number of years that you can claim this deduction, which is up to a period of 8 years since you start repaying the education loan. Other than this, for our salaried viewers here, there are two more expenditures which can be claimed as a deduction. One is the people who don't have a home but are staying on rent. So HRA or the house rent allowance is the most commonly availed deduction, which is again an expenditure allowing you to be claimed as a deduction. And the second is for all those who have gone on a trip, or let me be more specific here, who have gone on a holiday within India this year. And I'm presuming a lot of people have done that in the last financial year. Then you can also claim an exemption from the leave travel allowance or leave travel assistance. If you have this component as a part of your CTC, then to the extent you have spent money on your domestic vacation in the last financial year, this can be claimed as an exemption from the total allowance that you are eligible to in your CTC.
Okay, so I think we've pretty much been very comprehensive in terms of the expenses that are allowed to be deducted from your taxable income. But let's talk about the investments that you can make. And I want to kind of put you on the spot because we did speak about ELSS yesterday, and no doubt it's a brilliant product, but there are several other investments that you can make. According to you, what is the most tax efficient and return positive investment that you can make under the provisions of the Income Tax Act that reduce your tax liability?
So, Alex, indeed, this is a spot, but let me be very upfront here. And I have been talking about this to people very openly that there are a lot of comparisons and illustrations that are done showing how ELSS scores better returns over the long term to traditional investments like a PPF or a PF. But I have a slightly contrarian view here because I think one cannot compare the returns that a product like a PPF does with an ELSS, because I think all these traditional funds, which are your provident funds, or for that matter, even the 5-year bank FD, which gives you a ATC deduction, and the EPF, all these come in the category of fixed returns. And I will go a step further that the PF or the PPF, they are giving you secured returns and risk-free returns because they are guaranteed by the government. So in this category, I think they are the best. So normally when people ask me whether they should max out their provident fund and the public provident fund, my first answer to them is yes. It may not be a case that you are doing this for the tax deduction, but if it's possible, do max out your PPF. ELSS, yes, but since it's not a guaranteed return or a risk-free return, there is a possibility that over a longer time frame, ELSS gives you better returns, but it's always an if. So I think both of them should be kept separate. People who want to diversify can do this in ELSS for in the expectation of better returns. But I think PPF holds its ground for me. So trying to answer your question of which is the best, I think rather than trying to find out which is best as a general remark, one has to evaluate what is turning out to be better in the person's profile at a particular point in time. So somebody having a longer time frame can look at ELSS. Somebody looking at a who is more comfortable with a fixed kind of a return should look at PPF for their tax saving.
Absolutely. I think you've answered this very well. Thank you so much, as always, Arvind, for taking the time. Always a pleasure speaking with you.
Thank you, Alex, for having me.